No long intro. Market analysis. Now, to start off today's mind map, let's take a look at what Marcus Aurelius says in his book Meditations. He says, constantly reflect that all the things which happen now have happened before. Reflect too that they will happen again in the future. Now, this idea isn't new to us. We've talked about this in the channel at great length, where we discuss what Ecclesiastes chapter 1 verse 9 says. It reads, what has been done is what will be, and what has been done will be done again. There is nothing new under the sun. Now, with those two premises in mind, it helps us to look into price every week when we're doing our market analysis, understanding that these markets are run by an algorithm. And if so, there's a set of inputs, and ideally you receive different outputs. But we know what some of those things are. We know what IPDA is, and we know the things it primarily runs on, which is why we'll be taking a look at the charts in a few seconds and actually take a look at what the markets are likely to do for the following weeks ahead. So, first market we'll be looking at is the dollar index. As you guys know, a lot of us when we're trading, we have to keep the dollar in mind because most of the asset classes are based on the dollar. They react to whatever the dollar is doing itself. And from there on, we'll branch out into EU and GU, my two favorites. And from there on, we'll take a quick look at the Japanese yen futures, which I think are very interesting at the moment. And ultimately, we'll get to take a look at the E-mini S&P futures markets. And I'm starting to trade the S&P again, so it serves me well to actually include this in today's mind map. So first, let's actually take a look at the charts. We'll be starting off with the monthly. Ask you guys what you see. For the sake of this video, I'll actually delete all my annotations. We'll start over. Alright, so markets have been dropping, and if you were to scroll all the way, it was based off this bearish order block in here, or I'm not sure if you would call it a monthly fair value gap, but either or, we're experiencing a downturn on the dollar, especially on the monthly, so that's a big deal. But now we're getting close to that bullish order block here that's sitting right on top of those old highs in here, which I think will be very, very important, which is why I have a line here. So I'm expecting price to draw into this down close candle here and ultimately use it to head higher. And if not, if price does end up breaking this, which I don't think it will, then this would be where our draw on liquidity would be. So we'll probably be aiming for the mean threshold or consequent encouragement to be more precise, since it's a fair value gap. This is probably what we would be aiming for. But I really want to see a rejection from this order block. And if the markets do want to ultimately head lower heading into next year, the ideal setup would be for markets to trade into this bullish order block, retrace in here, so maybe a 70 or 62% retracement level, to fill in this fair value gap, maybe halfway up until consequent encouragement, and then trade lower into here, because the markets do trade straight and directly into this fair value gap. Then we'll ultimately still aiming for more upside to fill in this SIBI, or yes, this SIBI, but let's just refer to it as a fair value gap. So that's why I'm really interested in seeing what happens from December. It's currently December 4th. From December all the way up to till January, I really want to see what happens, especially with interest rates and the rate hikes that are going to be happening. I think December 15th. I want to see how the markets react, if they rally higher or trade lower straight into this fair value gap, which would cause some problems for me in my analysis. But ultimately, there's no problem when we're trading on the lower time frames anyway. So monthly bullish order block, that's our drawn liquidity right now. So now let's take a look at the weekly chart. Move this here. Here it is. Two down close candles. Takes out the eye, leaving this gap inside the candles, which is really one of the strongest PDA arrays to me when it comes to framing price. When you see that fair value gap inside of an order block, some powerful stuff, especially the fact that it's overlapping that old high at 102 and 945 cents. So that old high right here, to have that old high being the midpoint of that fair value gap inside, inside the essential equilibrium of that order block too, it forms for a really good setup, and it gives me a really good drawn liquidity, especially now moving forward into the end of the year. Also, one thing to keep in mind is the swing high here on the weekly charts, which is why I had this. It's a swing high. High, lower high to the left of it, and lower high to the right of it. And what's very important is the fact that this high took out this low. So now it's set. This is a done deal. I'm not expecting price to trade back into this range. Not for the next few weeks. It'll take something insane to draw price back up there. So this is what we're aiming for. So lower dollar. And the reason why I'm excited about this, ideally I don't want to see a lower dollar, but I'm long class 3 milk. And as you guys know, when the dollar is trading lower, it makes it way easier for commodities to trend higher and go higher. So that's the best thing, that's the best case for me right now. So for all I care, the dollar could crash right now. Might not be such a good thing to say, but that's kind of how I feel right now. I have a horse in this race, I suppose. Then let's drop to a daily time frame. Now daily is where things become to get interesting. So this is the swing high here. So it really helps us define a range. So this is the last space we're anticipating price to trade into. Had price drop lower, forming equal lows here, retrace into this volume imbalance. And I remember I actually framed this on my journal while I did my market analysis for last week. I had this gap and I noted, and that was my drawn liquidity. Even having written it down and keeping an eye on it, the markets traded to it and I couldn't even capitalize. But it was very, very fun to see how the markets did so in that volume imbalance. So, which is one of the things I'll be incorporating into my trading nowadays as draws on liquidity. You don't see them as often in the euro or the pound, but on the dollar index, you do tend to find those volume imbalances, which is now something I'll be incorporating. So let's do this right now. So if we're to see a retracement, so a retracement the next week, this would be the ideal place for the markets to retrace back into, fill in that volume imbalance, and ultimately trade lower. So it would be price returning to internal liquidity, and from there on I'll aim to frame a trade setup to take the markets lower to external range liquidity, because I don't think the markets will just trade lower throughout all next week. So ideally Sunday markets I would like to see them trend a bit higher, and even on Friday perhaps trend go even higher into this volume imbalance and then trade lower. That's what I'd like to see, but usually it's not that perfect. So either way, this is something I'm interested in. If I see the markets going higher, this is where I'm aiming to frame a trade setup, and from here it will be lower. There's nothing in between. It's either the market simply just trade lower into this, or retraces into this volume imbalance, and then we could frame our setup there. Drop to 4 hour. Now 4 hours where I have some concerns about what I just said in regards to the volume imbalance. That imbalance occurred on Wednesday, leading into Thursday. But these two candles, price did trade into it. It did trade into it on a 4 hour basis. So I'm very curious as of if price is actually going to work that level again. So it poses a big problem right now, because I'm not sure. I'm not so sure if markets actually want to go higher, especially on non-farm payroll on Friday. I had this level marked up, and I was literally waiting for the dollar to trade into this volume imbalance, and it failed to do so. It filled in the SIBI right here, and it traded it into this order block right here, but it didn't reach for it. Like to me, especially using non-farm payroll, it was the perfect opportunity for the dollar to just tap it just a little bit. I didn't need much. That's the reason why I didn't take a trade in EU, because I was expecting the markets to go higher. Even when this candle closed and I saw this wick, I was like, okay, the next candle should grab this volume imbalance. Only then will I be comfortable taking a long setup on EU, and it didn't do so. Now I'm at this place where it filled in the SIBI, it traded into a bearish order block, and we have a low, high, lower low. So breaker, or you can even refer to it as mitigation block, either way, but this is a mitigation in most cases. So because of the time frame, that one's a mitigation. So mitigation block traded into that lower end of it. Can it trade higher? That's what I wanted to see, but I didn't get to see that. So now that poses an issue. So this is something I'll have to keep an eye on whether or not the markets do want to trade higher into this volume imbalance. Let's drop to 1 hour time frame. And here it is. It gets a bit more complicated, doesn't it? So here's a low, high, a lower low. Price did trade back up into this candle right here, and on this time frame it looks more of a breaker. And as you know, breakers and mitigation blocks are essentially the same. They're in the same category. But what differentiates them is the breaker part. On this time frame, sure, markets trade lower and it did break higher. But if we're looking at a 4 hour, that's the high. So if we're looking at a 4 hour daily time frame, for that move to be considered breaker on that time frame, it would need to break that high and then trade lower. But on the 1 hour, it's perfectly fine to be considered a breaker. As you see the volume imbalance here, price tagged it. The price actually did trade it. So will price trade to it again? Tricky, man. Just very, very tricky. I think at this point I'm at the point in my development where I understand, okay, it's no, it won't. It sucks. I mean, I'd love to see it, but it really won't. Especially seeing how this order block lined up perfectly on top of the breaker, and price did trade into the breaker and the order block. It didn't have to go to volume imbalance because look, they already balanced everything out. They already offered price higher into that volume imbalance. So now I'm just expecting lower prices. So Sunday open, here's what I'm expecting. I want to see price gap up a bit, take out this high, and then ultimately trade lower. So no volume imbalance, unfortunately. Yeah, I know the markets are terrible, but we'll probably find another volume imbalance by the end of this week, so no biggies. Now let's take a look at the dollar. No, not the dollar. EU. There it is. What do you see? Not a lot going on here, but it's clear. Bearish order block here on the monthly. Then we have the old low here. Now this is a mitigation block. So low. This didn't break this high, so it's not a breaker. It's a mitigation block. So the framework and the way I understand it is that, let's say institutions went long here, expecting higher prices, but they didn't really get higher prices. Markets didn't take out this high, and markets tanked from there on. So they were put in this position where now they have to mitigate those longs. And one of the ways they can do so is when price returns back to this old low, they can either close out their long positions and go short, so reverse, or they just, I suppose, keep holding expecting higher prices. But these guys don't do that. They pretty much know what they're doing. So that's the difference between the mitigation and the breaker. The breaker itself, it takes out the high, it actually breaks the high, but the mitigation, it doesn't. I hope I get to a place one day where I can actually do something like this, where if the trade doesn't go my way, I can just hold for price return back to it 5 months later and then close it. That's some deep pockets, man. Some deep pockets. I guess I gotta keep working. So old low. If we extend that in time, it'll be the mean threshold of that bearish order block. Now let's drop to weekly. It's actually my favorite thing to do in prices, those markups. Although with YouTube I had to try to speed it up, but when I do it my own time, I put some music, I sing, I do all kinds of stuff. So we have a swing low here, very important. What's even more important, let me see if I can frame this properly. Swing low, and it formed the swing low while filling in this fair value gap in here. So we had a gap in here, price just tapped it and then trade higher. So we have a lower low to the left of it, and higher low to the left of it, and higher low to the right of it. The price did break that. So that break is what we use as confirmation. So we have this swing pattern here. So this is our swing low. Price used that order block, bullish order block, traded higher. Now this is our drawn liquidity, guys. So higher prices on the euro dollar, and actually worth pointing out that right here is if price were to actually trade into the volume imbalance. That was the framework I was going for. But as you can see, this is very small. If we drop into a 4-hour chart, during non-farm payroll, markets traded lower into this down close candle right here, which is an order block. So on EU itself, the markets essentially worked that level. So I don't think we'll see that volume imbalance play. I would love to see it, but it's not happening. And the markets did so inside of this old high, so which is mitigation block in here. So high, low, higher, high, retraces into this let's mark this right here. And now here is where price gets interesting. Let's do this. I know some of you guys have been asking what are these indicators. This is IPDA. These are the 20 day IPDA, 40 day, and 60 day. So as you can see here, most of the ranges have been worked. Most of them have been worked. So this is the 60-day low, 40-day low, and ultimately 20-day low, and all the highs have been broken. That's why from this monthly order block, I'm expecting to see lower prices, because there's not a lot for the algorithm to go on right now. It's pretty much worked the whole thing. Now I'm anticipating the markets to draw back into this range from this order block, draw back into this range where there's definitely some liquidity. But if it keeps going higher, I'm not sure what it's aiming for. I mean, after the 60 day, because the 60-day high was down here, it's gone. What is IPDA referring to now? Which is a question I probably want to have to ask ICT. I'm not sure if he's talked about this in videos before, but I'm very curious what happens when IPDA has worked like the 20-day levels, the highs and lows, the 40-day highs and lows, and the 60-day highs and lows. How does it reset? Does it reset off of a PD array? So this is very interesting stuff. I was asking myself this question I think yesterday. What happens? Because this is what I'm seeing right now. Markets are at a deep premium, man. I mean, the deepest of all premiums, ultimately. I think this red box here is delineating premium. Gray part is equilibrium, and this is a discount. Now, as you can see, let's actually remove the 40 and the 20. So we're at the top of this right now. So this is the deepest premium ever. At the 40, same thing with the 40, 20, ultimately the same thing. we've worked all the premium levels. Only thing left right now is the lows, the discounts, and price hasn't even traded to equilibrium, which would be our first goal. Have price to draw back into equilibrium, and then ultimately trade lower to a discount. But right now, I really want to see what the Feds end up doing. Let's actually remove these boxes. You can get this indicator yourself if you like. I don't really enjoy drawing the boxes myself. It takes a bit of time, so I can just throw on the indicators. And here it is. Traded lower into this order block in here. And we have these relative equal highs in here, which is where my actual drawn liquidity is for Sunday's open. So either we see a gap up and markets take out these equal highs, or if the markets even come close to trading lower and take out this low, then I would actually trade London session on Monday. I don't do that, but I would trade London session on Monday, aiming for those relative equal highs as my target. So it's very close to it. So ideally, if these markets do go lower, that would be perfect, man. Cause I love seeing relative equal levels. It's one of my best trades. So if we see price trade back into this range, then I'll definitely be looking to frame a setup here. Let's drop lower time frame. So it'd be somewhere up in here, but it's very close to it already, so don't want to hold my breath. Or you could even use this one, but ultimately this is the drawn liquidity. So we're expecting higher prices on the euro dollar until that order block is traded into. Now we're moving to the cable. You guys see, this is your monthly order block in here. Those two down close candles. For the sake of time, we won't go to the monthly. And of course, you see that fair value gap inside of it, which is ultimately our drawn liquidity. So we're expecting higher prices on the cable as well. And the cable is actually a better trade than the fiber, than Euro USD. So keep that in mind. Drop to 4 hour. Or if you guys want to take a look at it's really the same thing. So I'm expecting lower prices, especially after price trades into that fair value gap inside the order block. If these markets keep going higher, then I don't really know what they're reaching for at this point. And here it is, this old high. That's the drawn liquidity. This is where I'm expecting price to draw into. And for our weekly drawn liquidity, so this is it. So if you guys are trading, you really should only be looking to go long here. At least that's what I'll be doing. And we'll see at the end of the week how it plays out. But in all likelihood, this is it. I want to see these markets go higher. So from here, yeah. So 35 pips. Not a whole lot. The average daily range is more than that. So the markets can trade into that level pretty quickly, which is why I'm expecting Sunday, or I would like to see Sunday be kind of a slow day, trade lower, and then on Monday start to move a bit more aggressively higher. Alright, now let's take a look at ES futures. Not sure. Remove these. So you can see we have a fair value gap in here, and if you were to look at a 3-day chart or something like that, this would be an order block. Price trades into it, works it really well, rejects. So next candle, I'm expecting price to trade a bit lower, somewhere like this, and then higher, and then this would form a swing high, like we've seen in the other pairs. So yeah, I got us. Yeah. So heading into the end of the year, heading into the Christmas rally, this is what I'd like to see. So I'll actually be looking to trade this. Trade lower, so it'll be power of 3, open, high, low, and close. So that's what I want to see. Lower, but it's going to leave. It should leave this low. It should not trade into this low, and then trade higher. Higher to where, I'm not sure, but this is what I'd like to see price tag. And you guys may ask why this level. Well, that's the 60-day high right here. This is a 60-day high. So if these markets are going to reset, and I think they've already done so with euro and the dollar and things of that nature, to do the same with futures. Once the markets take out these highs, then the 60-day high will be traded, will have been worked. The 40-day high have been worked, and the 20-day high have been worked. So now we're at a place where IPDA should only be able to refer back to lower prices it's familiar with. Because I think actually says it really can only look back for 60 days. I'm not sure, but that at least that's how I understand it. I'm pretty sure it can, and it probably can look back way further, but when it comes to IPDA and how we use it, 60 days is about the max. So I'd like to see price take out this high. Whether or not it wants to reach for that volume imbalance remains to be seen, but right now I'm simply focused on the next daily candle. Trade lower a little bit, and I want to see that up close. I want to see it close higher, and then this is it. If it takes out this candle's high, then that'll be the confirmation that this is a swing low. If this is a swing low, then we're set to expect higher prices for the few weeks before the year ends. So overall, not a lot going on, but building really good frameworks for the coming weeks. High, low, higher, high, price trade back into this high. So some mitigation block in here, or order block, whichever one you really want to refer it, or breaker, I mean. So this is the high we're aiming for. And that's about it. And let's actually take a look at yen futures, which is a really good one. If we were to look at the monthly, this is a bearish order block. We had a fair value gap in here, and this order block in here also. Price already traded to it. So now I am expecting lower prices from this asset class. Is the swing low right here? That's the same thing I'm expecting from ES. It's crazy how these things do repeat, and there really is nothing new under the sun. So although this is on a weekly chart in a completely different asset class, but if you look at the pattern itself, this fair value gap in here, this BISI price trades back lower. This is what ES has done. What I wanted to do next is this part. I want to see price trade lower a little bit, but leave this low and trade higher. And the target is going to be this high, this candle's high. The minute it breaks it, then we have the confirmation that this is a swing low. And right now, that's what I'm waiting for. Even if ES doesn't break it, if the candle just goes down and closes as a wick or even as a bullish candle, but this high is still remaining, then the following day, that's the target. And if it doesn't trade there the following day, then I'm still targeting that. But chances are they can probably do so in about a day or two max. So let's actually take a look to remind you guys what I'm talking about. Here it is, down here. Next candle, down and up. And going higher, I want to see it leave a fair value gap or some kind of void, just to show that it's really willing to go higher. There it is. Now this is the yen daily chart. Throw's kind of messed up, guys. Price is trading in there. So next candle, I'm curious to see if this one is a form of swing high. So I don't want to see this high traded into, because if it does go higher, I'm not sure why it would, what it would be aiming for. So power 3, I want to see markets open, trade higher, and then ultimately close lower. And when it does close lower, I'm going to be aiming for this BISI in here. I want to see this filled. And ultimately, if these markets are bullish, this volume imbalance, I expect it to use it as support and then trade lower. Trade higher, I mean. There's a lot going on. There's a whole lot I want to talk about, but it's already been 37 minutes, so we'll close this thing down. So with all that being said, guys, that's the framework for the coming weeks. Those are the things I'm expecting. So lower prices on the dollar, which is a good thing because I'm long class 3 milk, so I want to see the dollar go lower so commodities will be easier to trade higher. So hope this video has been insightful. It's lengthy, it's long, maybe boring to some of you, but this is some of the good stuff. This is framework, this is bias. Actually, one of the things I'm really good at and I've excelled at. I remember maybe a year and a half ago, bias was one of the things I was always bugging ICT about. I was always watching ICT videos on bias. And somewhere along the way, just the change happened and it clicked. And since then, bias has never been an issue for me. Even, I think for a year now, bias has not been an issue for me. I think 90% of the time, my bias is correct. Just my entry or even being scared to take a trade. So bias is, if I were to do a SWOT analysis, which I will be doing in my own trading for risk management, bias, determining the daily bias is one of my strengths. Entries are iffy, but I digress. But bias is really good on my end, so take these things at heart. You may not believe it, but let's actually take a look at what happens this week. But in all likelihood, these things will pan out and our draws on liquidity will be traded into. So if you find this video insightful, just leave a like, I suppose. You don't have to comment. I don't necessarily bother with the comments too much, but if you have something to say or if you have any advice to give me, sure, go ahead and comment. I read all the comments and I try to like them also. And thank you guys for 1K. That was awesome, So I appreciate that. So with all that being said, have a good day and good trading for the following week.